The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for Larry Pesavento. I do not have a time machine. Larry is actually using the time machine, so I'm just going to have to use my bicycle right here and do the best that I can to do to look at the futures as the futures that Larry would probably be looking at, and commodities I'm going to be looking at, and I'm just going to just run down quickly that the Dow is down 59. This is the cash. Dow cash is down 59 at 14,559. S&P is down 7 at 1544. Comp index is down 26 now at 3177. And this is interesting because gold, which was up earlier, $12 is now disappeared. Uh-oh, somebody took the gold. There it is, up 6 at 1389. And silver is now down a fraction at 23.27. High-grade copper, and we'll look at that a little later on, is at 3.2. It's up a tad, and bonds are up 9/30 seconds. This is a very important phase that we're in right now, market-wise, weekly-wise. I'll get into that, but let me just do a couple of things that I right off the bat. So the E-minis has made a peak F, and what I was anticipating, because I had a particular technique that I use called the Chapman wave trim gauge, and it's got a fantastic record, but hey, records are there to be broken, so maybe this is not going to work, and says that within 1 to 2 sessions there should be a powerful rally to the upside, and I'm talking about 9 points or more, 7 to 9 in the E-minis, which should translate to about 7 or 9 or more in the cash. It's gone the other way around today, so it's got 2 days to do that. Maybe it'll do it tomorrow. That's number one. Number two is, if you're looking at the E-mini chart, now I do not have Larry's technique of the Gartleys and the butterflies. Yeah, sometimes draw them, but I don't have anything right now. What I do have, just very simple indicators. You see that black line there? Let me just go to the see if you can find there. I'm looking at the chart. This is my daily chart. I'm going to move it over, make it a little bit bigger because it's the E-minis. I want you to be able to see it. In the technique that I use, from the lowest low bar, what you should expect, if there's a buy signal, that it goes to at least a peak D, and that could be repeated, or it could go recycle to E, F, and even a G. There's no H. So you say, oh, man, how am I supposed to tell? Well, sometimes it's very simple. And look, in this case, you went from the low of November the 15th at 1331.25, and you merely went 1, 2, 3, 4 successively higher peaks to peak D, pulls back, holds the 200-period exponential moving average right there, and then it starts a brand new buy mode that goes A, B, C, D, has a technique that I call the instant restart, because within 3 bars with a given set of rules, it makes a new high bar, and it continues higher to where a third, A to B to C to peak D. Now, how do you know that it's going to go to D when all the technicals are failing? Well, the stochastic was holding beautifully above in the 90s, 90% or higher range. This bottom one here is called the slow stochastic. Now look what happens. Pulls back from 1523.75 down to 1477 in one of Larry's or Tom's or Steve's A to B equals C to D move down. And then it rallies again. It goes peak A, B, C, takes a while. It gets to a D. But then what happens is, I've got it as an E with the deepest pullback from the 1568 level, the 2nd of April, down to 1533.25, and then it has the single leg up, the spike to what I call a peak F top, where the stochastic kind of moves higher, but the MACD doesn't go anywhere close to the previous high. You see that? and then it comes back down. And it comes down where? To today's low of 1535.50 so far today. There are a couple of patterns that I've been talking about, and one was there's something called the flat base restart in this particular technique here. Many things have to happen for this to actually come back and break the 1529.50 level. If it happens sooner rather than later, well, that's saying that now you've entered a phase that says the daily has gone from a sell signal to a confirmed sell mode, and that the weekly chart, if it closes decisively below the 9-period exponential moving average of 1541, it's at 1539.25, that's the E-mini, and the stochastic breaks, it's at 90%, which is still very strong, and the MACD turns down, I've got to watch that closely. A sell signal will be generated if there's another close underneath the 9 EMA. A sell mode will be instituted if all the technicals break down at the same time. The 120-minute chart, if I can find it. Oh, boy. 120-minute chart. Anybody home? There it is. 120-minute chart gave a beautiful peak D. See how many times you get those Ds? Peaked at 1593 on the 11th, and it's pulled back. It ran to a peak C minus. C minus is very negative. It says be careful because you can retest the lows of 1535.75. It goes to 1538. Tries to move, and today we've gone down to 1553.60. Not good action. So I just wanted to cover for those of you who are fresh to my work. So I'm going to get rid of the 120-minute chart, and I want to do a couple of other things. I wanted to show you, it was brought to my attention this morning. I'd forgotten about it. Now, I don't know why, because it's a trading vehicle of strength. The NG, let me go to the NGN. Wait a minute, have I not notated this? Oh, I go to the UNG. I'm looking at natural gas. And the natural gas, United States Natural Gas Fund is in leg C up, but it's in leg B/E. I went through this in great detail with my last Master Trader series. I said from now on, what I'm starting to do, I've done it for a while, but I'm going to implement it as a technique. If my technique says that you've got a parallel wave count, but it favors a new buy signal, buy mode, rather than a carryover from the old one, I'm going to give that preference. And in this case, I'm calling it B/E rather than E/B, which would imply have a more negative connotation. There are a whole bunch of reasons why. Because the UNG trading at 23.80 up 93 cents went from the low bar in the weekly of 14.25 back in the week of the 20th of April of last year to peak A, B, C, D, had a very sharp pullback, but not sharp enough to negate the whole buy signal. And it holds beautifully on the trend line that I call the inside wedge. So it's a brand new buy. This should be gray A because it's underneath the previous high. But the moment we break out, because it didn't go below the previous initial buy signal, there's a chance that it's just extending that leg D to leg E. But everything about it, with a stochastic at 95% and the MACD expanding, says that natural gas should go much higher. And this is, I'm not going to say it's certainly, but there's a really high probability that having broken above the previous left side peaks of 23.92, hit twice in the last week of January of 2012 and the first week of February, that the candle we'd be looking at is that ugly candle of January the 3rd, week of the January the 13th, 2012 of 26.20. That's the candle I'd be looking at. Now, the daily says, okay, if you're looking at it that positively, what's positive about this chart? What's positive about this chart is that there's a brand new buy mode underway in leg C, and there should still be a higher leg up, and that can only occur at the very earliest next week. 1553, 50, 1535. Okay, I'll check that out. Thank you. Oh, boy, we got fabulous people in the den, always correcting anything that I'm looking at that did not correspond to what they've learned about the Chapman wave. 15, oh, wrong way. I just wrote it wrong. Sorry. I wrote 1553. It should be 1535. Thank you very much for the correction. 1535.50, and I'll do it in gray because the day is not done, except that the candle forming right now from the previous 120-minute bar says that candle in the middle of the E-mini between 1541.75 and 1540 is whether we go below or whether we go above. There's going to be a quick test of that candle. So that candle is like a magnet right now. So that's natural gas. What I will do, since some of you might be very fresh, you haven't heard me before, sitting for Larry Pesavento, hey, those are big shoes to fill. I'm doing my best. And, Larry is the expert in working his garters and his butterflies and different techniques that he uses. So I look at those. I'm impressed with those. I don't necessarily use it in my work unless there's something that I want to do double check for price points. Now look at this. If I go to the UN, if I go to NG, anybody know what contract you'd be trading if you're trading natural gas? Because natural gas, is it the M or the June or the July? I'm going to go to July, so I've got it notated for a couple of weeks to come. Let me show you something here. This is the natural gas chart. So there's peak A. So the low bar, let me show you how the Chapman wave works. You see the doji candle on the 15th of February at 3.384? Now I'm going to go peak A right there, peak B, peak C, peak D. Now let me give you the numbers. Peak A is at 3.537 the week of February. Let me just move this over there so I can see if anybody's in the background calling at 877-927-6648. Let me expand this. Okay, I think you can see. Oh, that's better. So now look what I'm doing. Peak B is on the 27th of February because the next bar was lower. The whole bar was lower. Then you make a doji candle high at 3.732 on the 5th of March. Pulls back. Look how it's walking the 9-period exponential moving average. Look at the beautiful techniques. I love teaching these techniques. Look at the fast moving average, the green line of the MACD. Look at the stochastic rallying. Look at the on-balance volume. Look at the relative strength getting a little toppy there. But my work says always rely more on the on-balance volume and the MACD than just the relative strength. Now look at this. So you make a peak D at 4.082. Next bar is 4.077. Now the question is, do you consider that it's going to go to an E, because this could be an instant restart, and then an F, and now we've got a brand new buy mode? And I'll explain what's going on. I'll be right back. Basil Chapman sitting for Larry Pesavento. We're looking at the natural gas contract. Dow's down 64, S&P's down 8. Not good action at all. We are building up a cash position.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Hi, folks. We are back. Basil Chapman sitting in for Larry Pesavento. My pleasure to be here. And normally my show is 11 o'clock till noon, Monday through Friday. Today, Larry is out. I'm sitting in for him. This is April the 18th. 18th? Yep, April the 18th. And, of course, I'll be back tomorrow. And tomorrow will be Friday, my usual time. Now, I just wanted to quickly cover this. It was a question that I had before. I'll go back to the natural gas chart because I want to show you the long term. It's unbelievable. And it would appear to me the natural gas, after all that talk that we heard when it was going down, month after month. What's his name down in Texas who kept on, he wanted to start his own, he was prepared to pay for, what was it, natural gas? I'm trying to think. I'll get all the facts together in a moment because I jumped too quickly. Oh, I can see his face right now on CNBC. And keep speaking about natural gas. T. Boone Pickens, right? And now I think it's made a major turn. But let me just quickly finish this. Intuitive Surgical made a high of 594.89 back in. That was when? That was April of a year ago, April of last year. Then it made the cup formation. Now it's more like a rectangle formation. And yes, it failed at 585.65. So that's why I call them the gray letters. Underneath the previous major high, retracement failure mode, it actually failed. So it is a B minus because it made a lower low. Thank you for pointing that out. I thought I had typed in B minus. It was hidden behind another line. So there it is, the B minus. Absolutely good. I love the den. You've got all these people who know different techniques, and they remind you about little things. So now the natural gas. Let me show you something. I'll do it on the black background because it's so striking. Look at this. This is from 1990. This is a monthly chart going back to 1990. In the 1990s, it was trading around about 23. And right now, oh, wait a minute, and then it had spikes to the upside, peak A, B, C, D. I believe that's a D. I have these all notated. I don't know what happened to them. They're somewhere in my library. $29, let's call it, December of 2000, pulls back to 20.26, runs to 27, let's call it 28 in February of 2003, pulls back, and then it has another big spike that is only an A to B, maybe a C. And what does it do? It goes to 29.23 in December of 2005. Do you realize it went down to $2.91? This is the continuous contract. So even here at $4.16, it's not even double. Bad data, entry chart. Oh, Zitao says, no, the natural gas continuous. This is a continuous contract. Going all the way back to 1990. Don't use it, he says. Stop! Oh, all right. Well, I know. These are the charts that I use, and I don't know what's wrong. I'd like to see one that's correct. Whatever it is, this looks to me like at $4.21, $4.21, that certainly a monthly turn is being made. And if it closes above $4.23, let's call it $4.24, that'll be the first decent monthly close since the low. That let me do this once again. Here, let me squeeze this. All right, back to normal. All right, wait a minute. It is smoothed out. This is a smooth contract, so I don't know. Maybe the price is a little different. Yeah, that's it. So this is 657716. Yeah, this is probably leg 4048. That would make leg C if it makes a new recovery high above 4.24. So that's going to be important. Now, so all right, maybe it didn't go that high, but it is at low. It was recently at lows, and that's really the point that I wanted to make. And in fact, it's looking very strong right at this particular moment. Now, waiting for data. All right, so the last high that I have in this contract was in the $10.40 area. So that clears up that particular chart. But in the meantime, back at the ranch, I do like what's going on. And the $4.83 is the 200-period moving average in the weekly chart that it has not been even close to since, I would say, it's a couple of years. And that goes back to, since it broke down back in November of 2008, based on my chart. So I'll be back, and we're looking at gold, we're looking at a number of other things. We'll look at the euro, the dollar, and I'll be back. Basil Chapman, 877-927-6648. Love to take your calls.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Hi, folks. We're back. Basil Chapman sitting in for Larry Pesavento. So, evidently, the price points that I have on the natural gas continuous contract doesn't match some of them, so we'll skip that. It's the nearer term that I feel is extremely accurate, the UNG and the natural gas contracts, so go with those rather than that long-term monthly. And there's a comment here that never use continuation charts. It depends on how you use them. I've used continuation parts for decades, well, at least for 20 years. And the way you use it is very, very important. For instance, if I go to the long-term continuous contract of the bonds, and we'll go to bonds right now, that is at US. I should have used the other one that I had when I have no problem with this at all. Yes, it's smooth. The dates are exactly right, but the price is wrong. In other words, there was a high in December of 2008, and it wasn't 125 and 24.30 seconds, but there was a peak E high. There was a high in July of 2012 in the monthly chart, but it wasn't 152 and 20.30 seconds. But that chart, I have no problem with this chart at all. It gets smoothed out, and I understand it, but the price points never change. The price does. So I have this. That's the way I look at it. Now, so look at the bonds. Bonds are in the upper channel. Bonds are right now at the TLT's up 0.08. Bonds are up 10.30 seconds. Because why? I'm going to emphasize this over and over. The Fed is determined to keep bond rates low. Look, here's my triple chart, my triple view of the 30-year T-bond rate. That is the 30-year T-bond yield, TYX, that's white. The 10-year T-note is yellow or gold. 5-year T-note is cyan or light blue. And it made a peak E, the fourth peak E, and it's pulled back the sharpest. And it's done the same thing that's the 30-year, that's the 20-year, 10-year, and so that's the 20, I'm sorry, that is the 30-year T-bond yield, but the TLT is the 20-year T-bond fund. So this is, yields are coming down. Why? Because the Fed is there to prop it up. Look at the UUP, look at the dollar index, power shares. It can't get going. It's been in the sideways range for 3-4 years. Why? Because the Fed is pushing it down. I'm convinced of that. Down, down, down. So look at this chart. It's stuck. The dollar is stuck. This is the S&P in making a potential peak D. I'm pretty sure it's going to be a peak D this week, which says that D or E, you got to be careful. And here is the TLT rally. And as the TLT rallies, very often you get the dollar pulling back. Doesn't always work that way, but this seems to be stalling the dollar's rally. And then one thing I wanted to talk about why I'm here is that in my weekly WOOD, W-O-O-D, this is the iShares S&P Global Timber and Forestry ETF. I think it's an ETN. It's in a peak C, or it could be a G, but whatever it is, it's pulling back. And it's pulling back sharply. If wood takes out 46.20 or 46 to support, it can come all the way back to 43.99. That's why I'm a little nervous about the home builders. Look at this. This is the home building index. It's a peak E. This is a decisive peak E. And if I'm not even going to say if, when it takes out 184.95, that'll be convincing to me that that was a peak E. So that's very important to me. And that says that the HGX, the home builders, the Philadelphia Housing Sector Index, HGX, got to watch that real closely. Now, a question about the IYT. Let's go to the IYT, which is the iShares of the Transportation Index, IYT. And the IYT has made a peak. Let me get this. This is a breakout. I'm calling it not an E/B, but a B/E. We'll see if I'm wrong. In other words, this is still a bull market for transportation index. That might imply that crude oil is going to be coming down even more. And what that says with this breakout, this is a fantastic breakout. I've got charts of the transportation index with this falling axe pattern in my CD introducing the Chapman wave methodology. I talk about this pattern over and over and over. The breakout, sometimes you can do it 2 or 3 times. Well, what's really important for the IYT, I think, for my eye, that it's going to be pulling back. What's key is that Roman candle is a particular candle that I've developed a thesis on, right there, that it's already into the wick, that there's a good chance the IYT will break under 104.40, and that might take it down to the low of 103.03. But this whole breakout area, that's kind of vulnerable, and I've got a 100.99. It's at 106.05, up 18 cents in the weekly chart. I've got the chance. I drew this in. It was premature, so I'm taking it away. I don't want to mess up the look of a chart. That says that this doji candle right here is going to be really important. The low of 103.84 is going to be very important, because if it breaks that, 103.03 will be the very important support level. But look at the monthly chart. This monthly chart, I don't actually know how any other way I can count it. I've got it in leg B. I have to make that a blue leg B, and possibly a peak B, because if there's no new high in April, there's a little while to go still. But if it doesn't break 112.30, then the IYT transportation index is saying, I'm still going to go to a C and even a D. See, I can't call this, I suppose I could call this a flat base restart in the Chapman wave. That goes to a B, pulls back, and holds above the 69.94, so this would make it C. But even if it was C, that would still be very positive. So no, wait a minute, A, B, C. Oh, that could be D. There's nothing about this that's saying D. 92% in the monthly chart, in the stochastic MACD still expanding. No, I think the transportation average or index, in this case the iShares Dow Jones Transportation Average Index Fund, I think it's going to be going higher. Short term, it's not acting well at all. And considering that the USO has been under pressure from a peak D in the Chapman wave, the second peak D, let me close this chart so that you know what I'm looking at. Look at this. We've got an arch. We've got the M-shaped pattern forming right here, right there. And if the USO, if crude oil, this is the United States Oil Fund, if it doesn't hold 31 round number low and breaks it, there's a chance it could retest the 2902 level of the week of the 29th of June. So it needed to get to that. Now, there are a couple of things that folks have asked me about. Would I go to the gold chart? Now, once again, I'm going to mention that this is a little behind. I don't trade it, so I don't actually mind it being behind. I'm going to go to the M, the June contract of gold. This candle that's forming right here with gold up 450, let me just double check because I'm a little behind. Gold is up 6. At this particular point, the monthly chart is looking terrible. The weekly chart is looking lousy, but the magnet of that 200 period exponential moving average of 1,495, that's in play, saying that breaking down like this in this inverted V or arch formation from the low of breaking under 1545 says that there should be a bounce. Whether the bounce from the 1387 can even get to the 1430s, let alone 1495, is going to be the big question. But there are many signs saying that on a shorter term basis, the gold contract is extremely oversold. That's the shorter term basis. But those weekly and monthly charts say, hey, if you're doing any trading on this, make it short term, because the bounce here has 1454 as a 9-period exponential moving average, and it's going to take a lot of work for the MACD to turn around the fast moving average. It hasn't even flattened out yet to be able to turn to get there. So that's what I want to look at there. And if I look at the futures of the silver contract, I believe it's the N contract, the July SI. Let me go to M just for the moment. No, I believe it's SIN. It's July, and I have not updated this chart for some reason. Oh, I've got the SLV. If you don't mind, I'm going to the cash. They look very much the same. So the cash has gone to a leg E to the downside. I have a longer-term target. The weekly target of gold, I'll talk about that in a moment. The longer-term target for silver would be 17 point in the 1890 to 1770 area. 1770 is the 200-period exponential moving average. Support in the monthly chart. Technical still look lousy, and on a short-term basis, yeah, it's made it. It's making a trough E. No, it's not making a trough E. It's a leg E down. It'll only make a trough if there's a higher low bar next week, but all the signs say that it's getting real close to at least a bounce. If nothing more, it could be just a bounce. But believe me, if silver takes out the low of 2196, closes decisively under that, that's going to say, uh-oh, this thing still has a long way to go down before there can be a rally of substance. So that's that. Now, high-grade copper, I've got HGN. There it is. Okay. Oh. Where did these charts go? Didn't I notate them all? Well, the pattern that I always talk about in my book, a CD book called Introducing the Chapman Wave Methodology, only on sale at TFNN, talks about the H pattern. Look, it looks like a lowercase h comes down. Here's the back of the H, sloping a little bit. Then you get the arch formation. And then within that, you get yet another cup formation, and then yet another cup formation. And then that one breaks down and goes to a lower low. And that says that the low, if this candle right here that's forming this week below the candle of the week of the 21st of October at 3.1175. If there is no rebound back into the arches themselves, let me just do this if you don't mind. Take 1 second. Just draw this along here just to show you what I'm talking about. So far, there's a break below, but it's closing so far on the week. Week hasn't finished. It looks like it wants to close above the low of 3.1175. That's a Roman candle. At some point, the price comes back and fills that entire candle. You might have to wait from October of 2011 to April of 2013, but it did it. So look at that. HGN. I've got the copper July contract. And now look what's happened. You formed another Roman candle. So the only way you can defeat the negativity of this candle is to immediately close above like it did over there. That's a positive. So next week, copper has to close. It has to not have a low bar inside 3.372. I'll give it a little room. Let's call it the low of that candle, the low of 3.270. If it manages to break above that and close above the 9-period moving average of 3.43, that's going to be very positive. So let me do this because we've got a break coming. I think we've got a break coming up. Question, can I do the Dow, the DIA? Actually, Zip, I did a whole chunk of that early on. I'll do a quick refresher on that. That's the Dow, the diamonds. I'll do that in a short while. The NGM, I'm doing the N. I'm doing the HGN, the July, only because I wanted to... I'm doing July for copper right now. So this is the copper contract, and copper says, let me go to the continuous contract, because I believe in continuous contracts. Look at that. This continuous contract shows how important this particular support is right here. So as I'll say it again, even though it's smoothed out, it gives me the price points that I need. The other thing is, in the breakdown, if copper on this continuous contract closes under 3.687, I'm not going to give you that price. That was a price that is smoothed out, so that's arbitrary. The low of October 2011, if it takes that out, that's a big negative, and it says be careful because it's going to test the low of June of 2010. So now let me do this, because this is really what I wanted to do once I knew that I was going to be filling in for Larry. I'm going to get it closer to the kind of work that I do. I wanted to show a bunch of things right here. I'm going to go to this particular pattern right here. In the Dow, you see this uptrend. This is what I give my subscribers every day, extremely detailed analysis. And the analysis is not just analysis, there's an analysis under that analysis. And then there are a whole bunch of charts, the Dow Diamonds 120-minute chart, the Dow itself, looking at it with from a different perspective, and the S&P and all the others. However, most importantly, you see that up channel. This is what I was talking about yesterday. This is what I call the buy zone. That up channel has a little tiny channel at the bottom and a little tiny channel at the top. And I call that the propellant buy zone. If it goes under that, that's negative. And that's the repellent sell zone. I'll talk about it a little more when I get back. Basil Chapman, 877-927-6648. Dow's down 44, S&P's down 5. I'll be right back.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Hi, folks. We're back. Basil Chapman sitting for Larry Pesavento. Larry's not here today, so it was my pleasure to sit in. This is April the 20th, Thursday, and the Dow's down 40, S&P's down 5. And let me continue talking about this. The MACD and stochastic are not that great, but the stochastic at 55% is attempting to start a move to the upside. That kind of goes with a bunch of my thinking, that there is still residual strength left in the general market, and that there could in fact be a rally above the 9-period moving average, which is now at 14,666. And if by chance, by Monday or Tuesday, the Dow is able to climb above 14,756, this is, of course, all implies that this beautiful up channel, the dashed line, which had hit exactly at 14,528 in the Dow this morning, isn't broken. And not only isn't it broken, you don't have more than a day or two to really break above today's high of 14,650. I would even say 14,670 has to be approached by 10:30 tomorrow. If that's the case, then the indicator has worked within 2 days, because what I would anticipate is that there's another move up, and this is the one that you've got to be most careful of, because if the MACD stays like this, then any move above that even if there's a new recovery high in the Dow, 40 all-time high actually, above 14,887, I would be looking at this and saying, okay, now we're in territory where I want to look at the DXD, the 200% short position. I want to look to see if I'm getting a failure pattern, because the MACD is the most important, that fast-moving average. When it is negative, it says there should be a limit to the upside. Now, on the downside, that says if by tomorrow morning, options expiration, actually what they've done is they've wiped out all the longs. Now let's see what they're going to do on the short side. They could still wiggle and spike to the upside. So I'm watching this real closely. All I can say is right now we have thus far held this particular pattern. There's a chance that we could still have a rally, and that rally will get to that arch high if there is a very strong one. I'm not sure this is a brand new buy signal to buy mode that's about to come in the Dow. My suspicion is it's like a coda to this particular move, especially based on the weekly charts, and that we are getting real close to some kind of a sideways consolidation. If it's rotational, we won't go down that far. If it's not rotational, the market, everything starts to decline. I showed you a number of charts and chart patterns that are becoming extremely overbought, so we're going to watch this closely. And then the question was, do I think there's a potential pop-up in the morning in the GDX? This is the junior golds. And I would have to say that based on what I'm looking at right now, I think there's a good chance that it could happen. The GLD still has that pattern that I was talking about. The GDX is the juniors. This is the GLD. That volume, climactic volume spike, which hasn't been broken. It's negated the moment the GLD breaks under 130.51. So we're about to close out. And what I wanted to do just before we leave, let me quickly look at my notes. Corn. I was asked about corn. I'm looking at the CM, I can't remember now, CN, July corn, and that says to me, oh, I want to look at sugar as well. Did not talk about sugar before? Yes, I did in the first show, my show. Yeah, corn looks like it's just got the same pattern, this H to an M pattern. It's just a sideways trading range. I just don't see much on the upside, and it's really important that in the channel work I do, it could be really positive for corn if it had to break decisive. You see that candle, that long-legged candle? Corn has to break decisively into the 650s. So at this point, it's only at 631. So I'm watching this because if it breaks underneath the low of this week, it's going to 599. Thanks for being here, folks. I'll be back tomorrow. In fact, I'll be back later this afternoon to talk to Tom, and I'll be back tomorrow. And have a great day.